there are a few interesting things in the news, and one of them I'm not going to go into too deep because I don't know a whole lot about it yet. I'm doing some research, but there was a lawsuit brought against Optimal Blue, and there was like 26 other lenders named in that lawsuit. Basically every major lender that you could imagine. And it was, I think it's called Mendex versus Optimal Blue. And this is all around a claim of price fixing via the sharing of what they say is private borrower data, and that it's helping companies to essentially fix the mortgage interest rates and increase their margins. That's the claim. I have only read the surface of it. This has been published in multiple different trade magazines. You can actually download the full PDF of the suit and the claims. Now, obviously, this is very preliminary. It has to make it through all sorts of things to become like official, but it is out there. It was actually brought by consumers. So these are customers that obtained mortgages that brought this class action lawsuit. And, it is interesting because, I'm a little bit familiar with some of the analytics that Optimal Blue and other, companies provide. There's plenty of third-party services out there where you can, get information about interest rates with other lenders. Typically, these don't share any specifics about who the lender is. You're just seeing, data points that give you an indication of, there's lenders, there's maybe 100 lenders, and here's where they're all priced on a similar type of a deal, but you don't know which lender it is typically. I think some services do provide that. So Optimal Blue is certainly not alone in this game of providing data analytics information about interest rates to the mortgage industry. But I just want to say this, generally speaking, which I think is really what Optimal Blue's claim is, if I read it correctly. And again, I'll dig deeper. Maybe we'll have a more in-depth episode about this lawsuit as it moves further, if it gets some traction. But in my experience, typically you're looking at pricing in the market so that you can be competitive. Meaning, I don't see most lenders looking at what's going on in the market so that they can raise their margin. Typically what it's forcing you to do is make decisions to lower your margins to be more competitive with the most competitive lenders out there. So it's just interesting that, as a mortgage professional, I'm not privy and have used this type of data in my business, but I'm aware of it. And generally speaking, I would think that you're trying to lower your margin to be more competitive when you see that there's other lenders out there that are, have a better price than you. So I don't know. It's interesting. It'll be very interesting to follow along and see where this goes. Maybe there's more to it. Maybe there's more data, being provided, which, crosses a line. Maybe they are giving names of different lenders and more specific borrower data. Again, I'll get into that if I learn more facts about it. But I guess my point is that typically when lenders are looking at data like this, it forces them to lower margin to be more competitive, not, raising their margin, which is what the lawsuit claims. So anyway, that'll be interesting. We'll see where that goes.